Okay. Hi, everyone. We appreciate you guys joining tonight's session, and we're excited to have you here for our intro to accounting session. So I'm joined here with Ariel, one of the founders of Stepstone, and with Joey, one of Stepstone's accounting and investment banking professionals. So our goal tonight is to really keep this session as informative but candid as possible. We really want this to be a conversation. So we'll have time for a more formal Q&A at the end of the session, but we definitely encourage you guys to write your questions in the chat as the presentation goes on, and we'll be sure to address those in the presentation. If you want to raise your hand on the Zoom, we're happy to call on you as well. But yeah, let's jump into it. So a little bit of background on myself. My name is Jake. I attended a non-target university and started my career at a Big Four accounting and advisory firm, and have since worked in investment banking the last 3+ years. Alongside my partner, Ariel, one of my passions in life really is helping students land finance jobs, top finance jobs, specifically students from non-traditional backgrounds. So before we hop into today's session, one of the main things that I want to bring to light is why students typically miss out on these top jobs and these top opportunities. And to us, it really boils down to 4 main factors. The first is that recruitment timelines are moving earlier and earlier. Firms are really competing for talent, and because of that, and because of how much talent there is, they really have moved their deadlines earlier and earlier. So it requires students to really prepare ahead of time. Second is that students struggle figuring out what they want to do, and as a result, they often miss out on opportunities because of the early deadlines. The third is that universities often aren't equipped with the inside knowledge to give students a leg up in the recruitment process. And the last is that students lack connections with industry professionals to help guide them in the recruitment process. So keeping those at top of mind for this presentation, I'll pass it off to Ariel.
So hi, everyone. My name's Ariel. I'm one of the founders of Stepstone. I'm a former Evercore investment banker and venture capitalist. So over the years, I've been very involved in the mentorship space. I previously built out Cornell University's investment banking career advising program and have mentored hundreds of students in breaking into top finance roles. So we created Stepstone because it's the resource that we wish we had when we were navigating our own career journeys. From the stress of just trying to figure out what the right career path is to, the competitiveness of how recruiting has, the competitiveness of recruiting, we're here to help students succeed in 3 main ways. So first, we provide access to free resources and educational events, just like this one today. We've compiled interview prep guides, resume templates, courses, and books on our website, so feel free to check those out. Second, we offer personalized coaching for career exploration and interview preparation. So all of our coaches are real-world professionals who have experience in the industry, and they coach students both one-on-one or via group sessions. So whether you're in the early stages and just trying to figure out what the right path is, or you're looking for very targeted recruitment preparation, mock interviews, technical sessions, our coaches are here to help. And you can book a free 15-minute intro call with our team so we can help you learn how coaching can help you succeed. And finally, and most importantly, we provide you with access to job opportunities. So we want to help you guys get hired. By submitting your resume to our talent pool on our website, which is accessed by top recruiters and employers, you can receive targeted job opportunities directly in your inbox. And we also offer job simulations for free to help students explore if a career path is the right fit for them. And the top performers of those simulations get recommended to our partnered employers as top candidates.
I also, Ariel, to cut you off, I also just want to plug, if I put our website on the chat. We do have a newsletter, and each week or every other week, we write a little bit about what's going on in the finance industry, tips and tricks for different jobs. But most importantly, every single week we send the most current internships and job opportunities for students. So if you just want to stay afloat of really what those opportunities are and the different openings, definitely be sure to subscribe to the newsletter so you can stay on top of those.
Right. So with that, I'll turn it over to Joey to kick off an introduction to accounting. Joey's a former Big Four accountant turned investment banker. He graduated from University of Maryland, and he successfully landed a competitive accounting job straight out of undergrad at KPMG. He then received his MBA from Cornell, and he's worked at Rothschild in investment banking. Over to you, Joey.
Thank you, Ariel. So Ariel just went over my background, but perhaps a little more detail. I double majored in accounting and info systems, and I did my internship at a mom and pop accounting shop in LA, given that I was coming back pretty late from my study abroad program and I wasn't eligible for some of the programs we're going to discuss later in the presentation. But even with that experience, I was able to turn that into a full-time role at KPMG. We'll go into the scheduling and then the recruiting cycle a little bit later. But Ariel, thank you again for the intro, and I'm happy to move on. So I want to give everyone an overview of the players within the space, pretty high level. I know everyone here is very familiar with the Big Four. The Big Four are the strongest brands within the accounting space. They are the largest in terms of revenue and headcount. And some of the things that experiences that you're going to get there that you may not get at other firms is really the opportunity to work with the cream of the crop client. Those are your Fortune 500 companies. And generally, working at the Big Four, given the brand recognition, will result in the best exit opportunities. Some of the trade-offs are, longer hours, perhaps a discounted starting pay, and the very specific nature of your work. The next three, not a general term. It's something I made up to refer to the firms that are in the next tier in terms of size and headcount, but roughly the same experience as the Big Four, but just perhaps a lighter and more stepped down version of that. And in the next tier, you're going to be moving on to the mid-sized firms, which make up the bulk of the accounting industry within the United States, at least. And these firms perhaps have a stronger presence in different parts of the country. And the key difference here is you're just going to get a broader scope of work. They're not going to keep you very focused on industry or product. You may be able to work in audit and tax. Let me go through that a little bit later. In your regional firms, as you can see here, I very much focused on New York regional firms, given that's where I am. These firms are leaders in the middle markets within their cities and sectors. And they very much offer you a lot of, I want to say a lot of pluses within the work-to-life balance and compensation pay range in order to compete with the stronger brand names to the left. So in terms of the walkthrough today, we're going to go through each of the different sectors. But one thing I forgot to mention on the previous page is some of the mid-size and more regional firms will not have strong advisory practices. They're going to be more focused on your core accounting, whereas the Big Four and the next three and some of the mid-size firms have larger advisory groups. So we're going to kick off with audit. High level, what goes on in an audit? So in an audit, you're going to be tasked with really verifying the accuracy and reasonableness of a company's yearly audited financial reports. And as an auditor, you're going to produce an independent opinion on that. By you, I mean you, your team, and your firm. And as simple as that sounds, talking about it right now, it's a very in-depth, bottoms-up review of their financials, beginning with the trial balances all the way till the income statement, balance sheet, and cash flow statement, really vetting each figure and your opinion and agreement on that. And by how nitty-gritty, and in some cases, you will make a site visit to check inventory at a company's warehouse. It does come down to that sometimes. And really, what is the goal here? Like, why are we doing audits? Because companies have shareholders and investors that need to understand and believe in what the reports the company's producing. So we're, as an independent auditor, we're putting our stamp of approval or our opinion on perhaps the disclosures or the numbers or the valuations within their reporting. If there are not any questions, I'm going to already move over to tax.
Yeah, and guys, feel free to either raise your hand on the Zoom and you can come off, unmute your mic and ask the question, or throw it in the chat and we can address it there. But yeah, we definitely want to keep this interactive. So
on this page, I'm going to go over what goes on in your tax and legal groups. For the most part, as a junior and as an associate fresh out of undergrad, you're only really going to be doing one and perhaps a little bit of five. You're going to be given the opportunity to learn and go to seminars and learn about what goes on into 2, 3, and 4. But that is stuff that happens at the higher level. And it also happens perhaps in groups that don't recruit from undergrad programs or at the junior level. So number one, and most importantly, you're going to be preparing and filing federal and state tax returns. As simple as that sounds, that is the core responsibility you have. This is for all different types of entities, whether it's individuals, businesses, different types of funds, charities. These are the kind of companies that you're going to be filing returns for. And what goes into this? It's really just collecting the financials that a company produces, often after the auditors review it. You're going to be reviewing, in some cases, audited financial statements, arriving at the company's taxable income, perhaps, applying any deductions or credits on their behalf. And then nextly, and most importantly, it is your responsibility on the tax team and as their tax filer to make sure everything is accurate and on time. Within number 5, in tax, there are kind of niche and I want to say ad hoc advisory services that you get involved in. And this is kind of in the advisory space in the sense that, your company or your client may engage in a certain transaction or may want to invest in something or may want to divest in something. And this is their opportunity to ask you for advice on, hey, what are the repercussions of this if we go forward with that? And there's some analysis and report producing that happens on that end. And there's also kind of advisory that happens in the technology space, which I'll get into on the next page. So given how on the first page when we were discussing the niche nature of Big Four work, the emphasis in this presentation will really kind of be Big Four and Next 3 focused. So when you're in tax and even audit as well, you're very, I'm going to answer that in a second, Grant. You're very much going to be focused within a sector, meaning if you are in financial services tax, like I was at KPMG, you will not be filing returns for Pepsi, Frito-Lay, and all these major Fortune 500 companies and corporations. You're going to be filing tax returns for Point72, HIG, BlackRock, Blackstone. There's no overlap, meaning if you're in one space, you will not see another space. Also, other groups that are covered are high net worth individuals, banks, and they're more ESG focused groups now as well. Within specialties and the product focus, even though I said you are going to be doing state and local returns, which you will be doing, if a company has a national and broad state exposure, there are state and local support teams that come in and assist with that. And they're going to be using your federal calculations as well. International tax is what it sounds like, advising companies with international presences, on the implications of what that means for them. They're not really going to be filing. These are mostly attorneys that, advise on the different situations. M&A tax is a recent addition to the tax fold of the last 10 years. These groups primarily recruit a little bit from college programs, but primarily transfers in internally. And whether there's an M&A deal, what are the tax implications? Transfer pricing deals with companies that sell to themselves internally via different entities. Like Coca-Cola is a global company. What happens if Coca-Cola US sells to Coca-Cola Italy? What are the implications of that? And tax technology, as I was trying to say on the previous page, is kind of onboarding your internal software to your clients and making sure that they have the right tax technology for you to do your job and produce their tax returns. Let me just take a peek at the questions real quick. As a whole, in the Big Four tax practice, do new associates typically work on company tax instead of individuals? Great question, Grant. So the individual groups, the groups, so if you're at the Big Four and you're working on individuals, these are strictly high net worth people. These are the only kind of people that can afford Big Four and Next 3 fees. So meaning, as rich as your millionaire uncle is, he's not Bill Gates rich, and he's not going to be having his returns done by KPMG or PwC. So the high net worth individual groups are on the smaller side, given the small amount of the population that would fall in that bucket. So the general groups that you're going to fall into as an undergrad coming out of college will be your financial services, your business corporations, and a mix of the other groups. I think if I'm comfortable, the percentage I would give would probably be 40%, financial services, perhaps 30%, corporate taxes, business corporations, and then everything else consists of the remaining 30%.
So Joey, for For
Did
someone.
I do that math right? I apologize. I said 40, 30, and yeah,
You're-
40, 30, and 30. Yeah, sorry.
So for someone who's interested in accounting, and maybe they're interested in, say, specifically financial services companies or maybe high net worth individuals, do they have really a choice if they're looking at a big four firm in which group they can sit under? How does that really work? And how can students best position themselves to maybe land in a group that they're more interested in?
So the main idea is to kind of have background in that space. So if you want to go into, high net worth individuals, perhaps work in wealth management the summer before, something to carry over. But in reality, unless you intern in that group and make relationships there and have a positive impact, which you don't have a lot of control over, before your internship and full time, they're going to ask you to preference groups, your top 5. And in reality, you don't have much say. And I know that's difficult to hear, but that's just the way the cookie crumbles with places like this where there's such demand for accounting students to work at.
I will say, and I wasn't necessarily in the accounting arm of the Big Four, but I was at Ernst & Young in the consulting group. But it was very common during the internship for current interns to network with people in other groups that they were interested in. So there was a potential for full time to maybe work for one of those groups. So again, I would really, really highlight just the importance of networking, both before, but also specifically while you're on the job. If there's a specific group you're interested in, do everything in your power, shoot the manager a cold email, try to get to know them, make sure they know your name. So, maybe when it comes time to selecting groups for full time, you kind of have a leg up against the other candidates there.
That's accurate. And I have a friend that went through that exact situation. He summered in a FATCA information reporting group, which is effectively the portion of tax where, you're filling out W-8s and W-9s. He did not want to do that. He networked with financial services and got his full-time offer within that group. Moving on to the next page. So within advisory, there was only so much we could really do here. But the emphasis here is really, I'm going to focus on the groups that accounting majors typically find themselves in. Those are the ones highlighted in red. And on the page is really just the titles of the different groups within advisory at the different firms. And it should be noted that all the firms refer to these groups differently and have different trendy names for them that they frequently change. But for the most part, at least at the Big Four and some of the next 3, they all cover the most stuff. They all cover the same stuff. So beginning with deal advisory, this is all of the advisory work in relation to a transaction, whether that's pre-transaction when you're doing deal due diligence, and you're doing due diligence on behalf of private equity firms and sponsors and companies that may want to acquire an asset, and you might produce a Q of E, which is a quality of earnings report that attests to a company's financial performance, but not to be confused with an audited financial statement, which we discussed earlier. There's integration, which is post-transaction. And that really goes into, hey, we just bought this company. How do we integrate their different groups into ours? And then there's your traditional IB arms at the Big Four, which are generally referred to corporate finance groups. They are separate entities and sit under a different umbrella due to FINRA and financial regulations. But those groups do effectively lower middle market investment banking and selling of companies. Within the risk and regulatory space, think of the audit that we discussed before, but internal audit as opposed to external, right? So you're going to be going at a company and you're going to be assessing their risks and controls. If X happens, do we have an alert that triggers that we can stop it? Are our revenues and expenses being recorded properly by our systems? That's the kind of work that goes on into these groups. Obviously, higher level, there's more detail that goes into that, but also, there's your investigations in forensic accounting, which is kind of, assessing where money might go, where it's hidden, and diving deep into financials and kind of seeing and tracing the trail of money. And also within that space is what's called anti-money laundering, which is working on behalf of banks and making sure that they're adhering to the guidelines and provided by the government with regards to that. Lastly is valuation. Within valuation, you do traditionally find your accounting and finance double majors. These are your students who were on the fence, but want the exposure of both spaces. And what you're doing is you're going to be valuing entities, different types of assets, companies, and also, funds. And what that results often in is a fairness opinion, which is an opinion that your firm is going to stand by and that a client is going to use on their own behalf. But what goes into the work here is really your traditional financial modeling. Your DCFs, your different kinds of dividend discount models, depending on the company, depending on the asset. It's going to be a little bit different in real estate as well. But a lot of people who are very finance focused either want to find themselves in perhaps deal advisory and valuation, and we'll dig into exit ops a little bit later, Joshua. Branch of the firm different from the consulting branch? Yes, Grant, it does. So all of the firms do now have like true consulting arms. Like PwC is called Strategy & Co. EY's is Parthenon, and these are separate entities, I believe. But a lot of work that's done in advisory is strategy related, even though I didn't go over it. So, if you do want to be in true consulting, being an advisory is a good stepping stone to that. But a lot of the work in advisory is more perhaps of a step down of what goes on at McKinsey, Bain, and BCG.
Yeah, I will caveat that, as Joey alluded to, the big four love to change the names of the different groups, the different positions. They're very big on acronyms that are impossible to keep up with. As far as if you hear like big four advisory and big four consulting, more often than not, they're typically talking about the same thing. But as Joey also mentioned, each firm does have a separate, what would be more so like a strategy consulting arm or more so a management consulting arm. And though that type of work would be more aligned to something like a BCG, a Bain, or a McKinsey.
I hope that answered your question, Grant. Moving on to the average day-to-day for an audit and tax associate in the off-season and the busy season. You'll notice that there was just no way for us to kind of cover advisory here, given the different nature in each of the different verticals and products that you might work in advisory. I will say that the work is less seasonal in those groups and ebbs and flows on a deal and engagement basis. So with regards to the off season, your hours in audit are your traditional 9 to 6 or 6:30. You're going to be effectively doing what we discussed earlier in the presentation, but you're not going to be using the final financials. You're going to be using numbers that come in sporadically throughout the year, kind of spot checking them, doing your analysis on them, and seeing if there are any initial things that you need to flag. And it should also be noted that you're likely going to have to do this work again at the year, especially if the numbers change, which they often do. Ariel and Jake were adamant about me being transparent about the tax off season, so I'm going to be very clear. It's very slow, and given the support that the Big Four have around the work from home schedule, it's pretty chill. The hours are usually less than 8 a day, unless you're working on a true off-season deliverable like estimate preparations. Some hedge funds and some corporates like to know in advance what they're going to pay, so they kind of want you to create a mock return. But for the most part, in the tax off season, you're going to be doing very like organizational and operational work, preparing request lists of the things that you're going to need during the busy season, going to seminars, or often this is when they send you to their yearly training and kind of, improving your tax technical knowledge, things along these lines. It's very slow. Like I remember leaving, there wasn't work from home when I was in the Big Four. That wasn't a thing yet. But I remember leaving, before 3 o'clock on many of these days and kind of, enjoying the off season, I will say. The busy season between audit and tax is very different. I want to make it clear that a lot of people aren't told that tax really has 2 busy seasons. And that's because a lot of people don't make it by the first April 15th deadline and wind up having to either extend, or they just plan on filing by the extension date, which is usually September 15th. And that really takes a chunk out of your summer. And as someone who is in that space, it was pretty tough to not have a summer, even though I had the most chill off season. I guess that's the trade-off. And what goes on during the audit busy season is you're generally going to be on site at the client, so you have easier access to information and requests and clarification that you need on things that you're working on. The average hours are minimum 12, go longer as you approach the deadline. And the same goes with tax. But the thing in tax is you cannot afford to miss the last deadline. So it's all hands on deck as September 15th approaches. There aren't many all-nighters. I think I had 1 or 2 in 3 years. Not everyone has one. It's dependent on what happens at your firm and with your client. But tax gets very rough towards the beginning of the fall, the end of the summer.
Joey, how does the role change as you become more senior? Like, what is the work-life balance like, and is it more relationship management focused? How would you describe that?
I don't think it'll really improve from associate to senior associate. Perhaps at the manager role, you're strictly in a review role and you're beginning to build out relationships with clients. I'll say that begins to happen there at the third stage. But your hours aren't that much better. Perhaps they improve at the senior manager and director level, when you're in a business winning position. But for the most part, it's not different within your first 4, maybe 5 years at the firm. Just see, is there something in the chat? No. So over here, I'm going to focus on the associate and senior associate sections. And then Josh will discuss exit ops. So, you're going to be entering as an associate, and you'll see the pay gap there is from 65 to 75. This is in your major cities, your New York City and your LA, maybe Chicago's a little less. They do pay less, if you're going to be working in Tampa, where the cost of living is less. That's just how the cookie crumbles at the Big Four. It's not like investment banking where in all the different geographies, the pay is the same. So the pay gap is so wide because the firms do value the master's degree, at least at the start, meaning you're not eligible for a job at the Big Four unless you have 150 credits and you're able to sit for the CPA. And I'd also like to note that you can't get promoted from senior associate to manager unless you have your CPA in audit and tax in certain advisory groups. But the Big Four do like you to have certifications or graduate degrees at a certain point. And, in tax, I started it was a little bit less than. So I started at, 60, whereas the people with masters in taxes started at 70. But I want to note that as you, progress at the firm, that levels out, meaning they're not going to pay a manager with a master's in tax more than they're going to pay a manager without them, as long as they both have their CPAs. So it's kind of just like an initial pat in the back. And in audit, it varies by the firm. If you have a master's in accounting, they might give you a higher sign-on bonus versus your peers by a few grand, or the starting salary maybe a little bit higher, but it's all nominal in the scheme of things. And that's really how I look at it. People are going to ask, Joey, why didn't you get a master's in tax when you were going into tax accounting? And the answer is I didn't have StepStone to guide me, through that process and to let me know that, hey, this is how things work. In terms of your exit ops, from audit, you really have the broadest exit ops given the nature of the work and how you're really getting in the weeds in the company's financials and really understanding their business model and the different things that go on there. So you can go into fund accounting, just general internal accounting roles. If you have your CPA and some valuation background experience from your audits, a lot of people like to pivot into FP&A, which is a hybrid finance and accounting role. And the rest of the roles can also, on the rest of the audit column, can also happen. Within tax, I want to make it very clear from my experience, it's very hard to get non-tax roles out of tax. I do have friends that exited into fund accounting and internal accounting roles, but you have to have your CPA and you have to have a good knowledge of accounting. Tax is very niche work. And unless you know that you want to go into it, I highly recommend kind of staying in the broader sectors within the accounting firms. Within advisory, it really depends on what you're doing within the advisory groups because they're very different. The nature of their work is different. And the skills and experience that you're going to gain it really varies. In terms of, I'll answer that in a second, Jerry. In terms of, Josh going into IB, the people who generally move into IB from the Big Four are either coming from the true IB corporate finance groups. That's the top tier. In my opinion, Jake, you can fight me on this given your involvement in the hiring processes at Oppenheimer. But I think more people do better at evaluation than they do deal advisory. And it's all market dependent, right? So during the pandemic, we had what was called the big resignation. Everyone's like, screw this, I'm not doing IB, I'm not working these crazy work from home hours anymore. And they were desperate for talent. So they were really going after anyone with any financial experience. And they started looking, either at smaller banks for starters, or then, the deal advisory and valuation groups. But now in a tighter market, it's not so easy to make that transition. You would likely need IB experience, but if you do network properly, generally coming from one of the two groups that I mentioned is best. My opinion is valuation. Jake, let me know if you differ.
Yeah, no, I would agree. I think it's very market dependent. During 2020, 2021, investment banks largely needed bodies. So the next best thing to prior investment banking experience were students or people who are working in accounting, because having a fundamental understanding of accounting and financial statements and maybe some familiarity with a mergers and acquisitions process, or what that looks like, what those financials look like, that was really the next best thing. And they had the type of skills that investment banks could work with in order to train up a new analyst. So yes, Joey, I would agree with that.
And the only other point I would add, Joshua, is that within valuation, you're doing the more technical nitty-gritty aspect of IB. You are doing the financial modeling, right? And I think at investment banks, at the analyst level, they can teach you how to do the marketing materials and the PowerPoint work. Like that's stuff that you can perhaps pick up on not having that experience from the Big Four. But, having the valuation and modeling experience is more directly translates, as opposed to within deal advisory, a lot of the work it's kind of on the exterior of the transaction, whether it's due diligence due diligence pre-transaction or the integration things that happen post-transaction. If you need any further clarification, just let us know.
I will say, and just the truth of the market as it stands now is that for someone looking, if you were interested in, say, investment banking or private equity coming from an accounting background, it is a much, much harder atmosphere to do that currently than it was 3 years ago. But again, that is just the nature of, the larger markets and then the hiring market. We expect early, the first quarter of next year for the markets to pick up again. In that situation, if that does happen, you would see investment banks really tapping into, not just people with pure investment banking experience.
And like Jake was saying, you could also argue that there's different scales, right? Not everyone is going to leave PwC valuation, for Moelis investment banking, but they could find an opportunity at a smaller, more niche focused bank, or perhaps go into corporate banking or something just more finance oriented, and continue to trade up if that's the end goal. So what does the accounting recruitment process look like? And guys, the focus here is really primarily on how things happen at core schools, given that I attended one. That was the experience that I had. And in preparation for this, those were the undergrad students I was able to network with, or the recent grads. So it's very important to note, Jerry, I'll actually answer your question shortly, if you don't mind. It's really important to note that the recruiters at the Big Four, the campus recruiting staff, they do not care when you are graduating. They care about when you have your 150 and you are CPA eligible. For further clarification, if you graduate with 120, and you're going the master's route, that will provide the additional 30 credits. I personally went the 150 route and did it in 4.5 years. I didn't put a whole lot of thought towards it. I just had a lot of credits already for my double majors and taking classes over the summer that it made more sense at that time. Jerry, I'll answer in a little bit, how it varies on a situation by situation basis.
Joey, just for the students who may not be familiar with the CPA or the 150 and the relevance of that? Could you just touch on that briefly?
Sure. So within the last decade, I want to say 15 years, I believe over 40 of the states in the United States of America now require you to have 150 credits to sit for the CPA. The background is that accounting felt like they were being pushed to the side by the other industries, which, were very much focused on higher ed and graduate degrees. And they wanted to make the industry a little bit more challenging to get into. So in most states, if you want to sit for the CPA, you do need 150 credits to do so, whether that consists of 120 undergrad and 30 masters, or just 150 in total at the undergrad level. And within that, there are accounting requirements that you need to take. So, for example, like let's say you majored in something liberal arts related, and you're like, I'm not getting the job that I want. I want to pivot into accounting. Your master's in accounting will give you all the accounting credits that you need to properly sit for the CPA. So back to timeline here. In your earlier summers, you can most likely do whatever you want, and I'll go into a little more detail, but you are not really eligible for an accounting internship at most of the major firms unless you are 2 summers away from your 150. Whether that's your sophomore year or your junior year, depending on what cycle you're on. That's really when things happen. So in your earlier summers, I highly recommend, if you're gung-ho and set on accounting, you find your way into either a mom and pop accounting firm, or perhaps some of the regionals that are more loose with their guidelines in terms of who can intern there. But if not, ideally you should have some sort of business internship. Worst case scenario, find any full-time work opportunity that you can put on your resume and speak to. For those of you that really want to have fun and understand that this is like the last freedom that you're going to have in your life, I respect that too. So, it's not going to put you in a better position, but you're not going to be that much of a disadvantage as long as you can, get something concrete when you're 1 summer away. When you're 2 summers away, the Big Four, and I think some of the next 3, have what are called leadership conferences. These are 1 to 2 week seminars where you're not going to be doing much work, but these firms are going to sell you on them and their experience and what they're able to do for their career, for your career, excuse me. And historically, these were diversity focused, but they've opened the door to everyone, given that they need more bodies and they want more people in the industry. These are structured so that you can attend more than one. And often if you make a positive impression and they seem to like you and whatever they give you to do, this will result in an internship offer for the following summer. So, in terms of core and non-core, I don't know. I have to be honest, I don't know exactly how eligible non-core schools are for these leadership conferences, but I want everyone to know this one fact. There are more internship offers than there are leadership conference offers. And there are more full-time offers in total than there are internship offers. So do not be discouraged if you miss out on one or the other. And as we were saying with regards to Josh's question earlier, there's always the concept of trading up. Accounting values accounting experience. And if you're not at the firm or the caliber of firm you want to be at, this industry is always in demand. And you will always find your way into an accounting seat if you put in the work. When you are 1 summer away, you need to have an accounting internship if you want to have an initial career in accounting. Regardless of the size of the firm, it needs to happen. So core schools, your recruitment will start in the fall. You should hear back, about your offer, by Thanksgiving or latest New Year. And non-core schools, they're going to have larger resume drops. In terms of the networking process, I don't know of anyone that kind of did cold reach outs, but I don't think it can hurt if you really want to find yourself in the mix. So if there's any questions on this cycle and how it works, I'm happy to answer that. If not, I'm going to pivot towards Jerry's question from earlier. So Jerry, would you say the master's is worth it then? Jerry, if you know you're going into tax and you want to have a career in tax and you're interested in it, I definitely think it's worth it. if you're ahead on your credits and you don't want to pay the extra money, I don't think the extra salary makes it worth it. Given that if you want a career in accounting, it levels out. I think it's a good way to improve your accounting knowledge, and it'll give you a stronger basis for the CPA exams. But I think it's mainly ceremonial. Again, it's personal opinion. If you're graduating with only 120, you should 100% do it. But if you're graduating with maybe 130-ish, I think you should explore just, getting the necessary credits that you need in an expedited process to sit for the CPA. I don't know a lot of people. Like, for instance, my one friend who did the master's program, he went to UF, he was in state, the master's program was in state and wasn't that much more money. So it was like, why not then? It only benefits him, right? And it's another master's degree to have under your belt. But it really depends on the situation. Like, if let's say you went to, if you want to get your master's in accounting at a very high cost school like NYU, which will definitely result in a full-time accounting offer, I don't think it's worth the cost of what a school like NYU charges for a master's degree. That's my personal opinion in accounting, at least. Jerry, let me know if there's any, good. I'm glad you agree. So how do you stand out as a candidate? I want everyone to have a printout of this page, assuming they want to go into accounting. Please intern at an accounting firm or an accounting related role, beginning, after your sophomore year. It will make your resume stand out, especially if you're struggling in the GPA department. One thing that I should have mentioned on the last page is number 2. If you are a core school, and it's some non-core schools as well, there are information and networking sessions. I'm not comparing this to a career fair. PwC, they're going to come in and they're going to host an info session with, you guys can't drink, so it's going to be like, soda and some hors d'oeuvres, and you're going to get into talking circles. And it's a good opportunity to meet people in the field and get your name out there. And don't worry if you say something silly, they're not going to remember you. But what they will do is they are taking attendance. And if they're like, Jake's been to every PwC event this year, this guy's clearly interested in being a part of our firm, we're going to give him a first round interview. It does work like that. Don't let anyone tell you otherwise. So please, guys, be proactive and attend these events. And they are limited and it's on a sign up basis. So as soon as it gets posted, sign up.
And just to jump in there, if you're not at a core school and you haven't even heard of these events, joining our events like this, to even be aware of that, is huge as far as giving you a leg up in this process, because there might be events that we host, or maybe EY or KPMG is hosting a global event that anyone can join. Now know, okay, I can look out for this event, and if there's a recruiter on that event, you can find their email, you can shoot them an email, and that's how you can insert yourself into the pipeline, especially if you're at a non-core school.
Grant, I'm going to answer that in the Q&A now, given where we are in the presentation, but I will definitely give you a clear answer on that in a few minutes. Number 3, have a good story. Be able to speak to your resume, your experience in your life thus far, and explain your passion and why you want to be in accounting. I know it sounds simple, but a lot of people do struggle with something like that. Number 4, you're going to be asked behavioral questions. No one is going to dig in on your accounting technical experience with you coming out of undergrad. Perhaps someone in a bad mood asks you something about the 3 statements. I don't know. I've never seen it happen. I don't know anyone that it's happened to, but they want to see that, you pass the character checks. So you're going to be asked about difficult scenarios. If you sign up with a Stepstone coach, they're going to go through the different types of questions and how to prepare to answer these, but you need to know how to answer them in traditional format. Ideally, it's going to be on prior internship experience, but group project and things that happen during the college education experience are fair game as well. And to be honest, those are the examples that I gave.
Yeah, and Mohammed, to your question, the behaviorals are really just as much an art as it is a science, because there's there are structured ways to answer these questions, but you also need to have the actual background and experience to be able to speak to it. So if you don't have a relevant answer to a certain question, there are ways to answer that still can lead to a productive conversation. But again, it's all about being prepared, and most of these questions are boilerplate. The best part of an interview, or the best type of interview, is when the interview completely goes off topic. The interviewer asks you about something and you guys get into just a conversation about, whether it's the first question they asked or one of your interests or one of your interests on your resumes or one of your clubs. So that's really the best case scenario for any interview. But it is all about being prepared and having the answers for the boilerplate questions.
And then you asked, what makes this story good? And the first question you're going to get asked in most interviews, even networking conversations, is tell me about yourself, or why are you interested in kind of pursuing a role here? And I think some of the important things to hit on: one, you want to showcase what sparked your interest in the field, and then kind of the steps you took to pursue that interest, whether it's you joined on-campus classes and extracurriculars, things that you've done to pursue that interest, internships, etc. And then you want to showcase kind of the specific interest you have in that firm. So make sure to do research on KPMG or whatever firm it is, and know kind of what makes them stand out compared to their peers. Maybe even go a step ahead and, really look into their 10Ks, believe it or not, and start to kind of understand specific elements of their business that maybe are not so obvious. So that's the difference between like a good answer and a standout answer.
And just for those who don't know what a 10K is, it is a yearly financial filing that companies publish, and they work with the accounting firms to help audit some of those numbers. But every company who's public, you can go online and look up, I don't know, Lululemon or Nike 10K, and you should be able to see their latest filed 10K, which is once a year.
5, be charismatic and curious. Sounds simple, but they want to see that you're normal and there's someone that they could perhaps work long hours with. Smile during your interview. Show that you're a friendly person and that you're curious about what goes on, but obviously don't ask questions about things that you should know going into the interview. Prepare good questions and be prepared to drive the conversation. This is key. The last 10 minutes, in some cases 15 minutes, depending on the interest of the interviewer, maybe the ball will be in your court to drive the conversation, ask questions that are relevant and pertinent to you and the firm, and show that you've done your homework. I want to be clear, guys. It's not the kiss of death, but you shouldn't be ending half an hour interviews early. You should not, unless it's at the interviewer's will. So what could potentially go wrong? A lot of this translates to the last page, but number one, weak behavioral responses. They really are assessing your character, right? And if you don't give good responses, or you perhaps trip up and let them in on something that they shouldn't know, it's an immediate red flag and likely a ding, given that they probably have someone who's performed a little bit better in that regard. So these are the things that you should be rehearsing in front of a mirror or your own Zoom camera, and perhaps getting feedback on by friends or someone at this organization. You lack synthesis and communication. That translates into the first one as well. But if the conversation isn't smooth and it's not going well and they sense awkwardness, they only have limited factors with what to build on. So they're most likely going to move on. But, this comes with practice. You'll become a smoother interview the more reps you get and the more preparation you do. So it's not something to dwell on if you think this is not your strength. Number 3, a low GPA. For most of the big 4 and the next 3, they are going to be honing in on this on initial looks on your resume. You should exceed a 3.5 if you want to guarantee a role at one of these places. People do move on with lower, but for the most part, you should be involved on campus. You should be doing different things and showing them that you want to contribute and give back, because they like to give you part of their marketing, mojo, which is that, they're involved in X, they support their veterans, They have marathons, so they want to see that you're going to take part in those company events. And if you're not doing that on campus, that probably means that you won't do it internally at their firms. So, try to get involved on campus. Ideally prior to applying to the internship when you're one summer out. But really, it should be something you want to do on your own. But definitely something you should have on your resume.
Joey, I just want to jump in here, going back to number 2, the lack synthesis and communication. This is just a reality, and it's to no one's fault, but COVID really played a part, and you see it with younger students not being able to communicate properly, specifically in an in-person setting, not knowing, how to interact with people, which again, it's not anyone's fault. It's just by nature of what happened during COVID and by people not having those years of interacting with people, especially when you're a teenager or you're in college. So it is super, 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 super important to make sure that you get your reps in practicing speaking to people, especially if you're going to interview with someone who is a little bit older and more senior. There are expectations on how you should act and the types of things you should say and, how you dress. These little things are super important that people pick up on that, a lot of high school students or college students, may have missed out on because of that lapse during COVID.
Lastly, we discussed this on the other page, but your main homework prior to each interview should be a unique answer, perhaps a little bit specific to yourself and the information that you've received about the firm, why you want to be there. You will be assessed and graded on that question, but also most importantly, what we discussed before, have a clear and articulate reason why you want to be in accounting as well. So I think there's a couple questions initially that I have to answer to catch up on.
Yeah, Joey, I'm gonna give a quick blurb and then we'll get to the rest of the Q&A.
Okay, go ahead.
But again, thank you everyone for joining tonight. I know this went a little bit over time. If you have any remaining questions, feel free to look. We prefer if you guys want to come off camera, unmute yourselves, put your hand up on the Zoom. We'll call on you. If you're a little bit too shy, feel free to throw it in the chat. But, first off, Joey, thank you for taking the time tonight. This was fantastic. To everyone who joined this evening, we really love the participation and the questions. But, if you guys want to learn more about accounting or investment banking or just how, we might be able to help you figure out your career path, feel free to book a free 15-minute intro call with us. Whether you're at the beginning of your career journey or preparing for interviews, Stepstone has a number of ways that we're able to assist you. We have a range of packages that can help you at any point in the process, whether you're just beginning or, you want more of a full service type of package. But we'll be sending everyone follow-up emails after this with all this information. So no need to write this down. We're also going to post a recording of this session so you can go back and reference it. But beyond that, it's time for Q&A. So we'll open it up. Joey, if you want to
sure. So let me.
That came in.
I know I owe some answers. Let me just pull this up. I believe starting with Grant. Do you need to be CPA eligible prior to becoming a first-year associate, or is it something that is just expected in first year or two? Great question, Grant. Historically, it was something that was just expected. Meaning like that they would hire people with 120 and expect them to figure it out, whether it was night school or on their own. But for the most part, that wasn't translating. So now they demand that you're at least CPA eligible prior to starting, and that you get your CPA within your first 4 years if you want to make it to manager in your 5th year, assuming you're on that cycle. People's career trajectories vary. But you need to have your 150. So either, your 120 in your master's or your 150 in total prior to getting a role. They do, for the most part, check transcripts. I only have one friend who pulled it off without it. And he was like more in an advisory group. He was like an internal audit. So he was able to kind of, convince them earlier on that he was eligible, even though he wasn't. I don't know how he bypassed it. It was poor review. I do have a friend that also got paid the master's salary, even though he didn't have the master's because it was a mistake on KPMG's end. So, miracles happen, mistakes happen, but for the most part, you should stay on cycle. Now you might ask Joey, like, what if you don't know where you're at, after your sophomore year? So by then you should just go for it. I mean, they may check how many credits you have, but you should go for a leadership conference, even if you think you're a little bit further out, and then you'll just have your real internship a little bit later. So that's how I look at it. Let me see the next question. And Grant, you can write anything if that was not sufficient. Mohammed, could ending question and interview be related to organizations, some recent event or some policy change? Yes and no. It obviously depends on, what recent event or policy change. Meaning when I was at KPMG, we got smacked with massive fines in relation to cheating on keeping up on the CPE credits and CPE exams that you had to take internally. So I wouldn't be asking your interviewer, hey, what is the firm doing to prevent cheating going on internally on these CPE requirements? And to clarify, CPE requirements are internal accounting tests you have to take by from the accounting board to maintain your CPA. And when you're at accounting firms, they just offer it for you. And to be honest, like, cheating was rampant. Everyone would take these tests at the same time and chat with each other. But now there are guidelines given the fines that the different firms have been hit with. Again, Mohammed, please clarify if that was not sufficient. Moving on to Erica. What are some extracurriculars that would actually hold some weight when I tried to apply first year of uni? I love it that you said uni. I just feel like recruiters might prefer someone in third, fourth year over someone in their first year because of their experience or knowledge. So with regards to extracurriculars, obviously things that are business and finance and accounting related, it's great to be in fraternity or sororities. Jake can tell you all about that. But I think for the most part, those are good roles and they don't really necessarily translate to a benefit unless your interviewer was in that exact fraternity. But, for the most part, those are the extracurriculars that carry more weight.
I will say, just on the extracurricular front, if you're going to school in the United States, there are social fraternities and sororities, but there are also business fraternities, which, Ariel, I mean, if you want to speak to your experience and just give a little insight on how that kind of prepared you for your career, I think that might be helpful.
Definitely. So across the US, some in the UK as well, and Canada, there are about 5 main business fraternities, which you could be in a sorority and a business fraternity. I know it's a little bit confusing. I was in both. And essentially, it's a social but kind of pre-professional academic group. So these are kind of 10-week training programs where you learn about all different aspects of business, whether you want to go into investment banking or accounting or consulting. They kind of accelerate that process, and a lot of employers are familiar with those programs. And when they see on your resume that you were in one of those, they know it's very competitive to get into one of them and to do well in them. That's kind of a good way to differentiate yourself, as well as the alumni network of those business fraternities are exceptional. So they really pull and vouch for you as far as helping you get into these competitive roles. So that's just something to keep in mind if your school has a Delta Sigma Pi, Alpha Kappa Psi, PGN. Those would kind of be the top 3 that come to mind.
And Erica, to the last part of your question, recruiters do prefer people later on in their collegiate education, and those with strong internship experience that they can rely on and attest to, and perhaps have references from. So that's why there aren't many opportunities at the very early level, but, use your network, use your family to find something or anything, that'll help you get to the next step. And, given that I don't see any questions, it's important for me to share a little bit about my story for just 2 minutes. I didn't have Stepstone. I didn't have the guidance that you had. I didn't necessarily make the best decisions in terms of my early career, because I don't blame other people. I wasn't asking the right questions. I wasn't seeking out the right knowledge. I went into accounting because most of the people in the business, I transferred into the business school because most of my friends were. I went into accounting because most of my friends were. I tried to get to the Big Four because that's where most of my friends were winding up. I did not do a lot of thought into taking the tax role, and I should have. But there's a lot of opportunity for you guys to figure out what you want, and that comes through internship and leadership experiences, as well as seminars and learning opportunities with Stepstone. You know, one of the things that we didn't highlight on the career trajectory or the recruitment trajectory is, you know, if you are ahead of your credits, you know, if you are ahead on your credit, on getting your 150, I should say, you know, perhaps you're further along, you've taken summer classes, night classes, or larger, larger course loads during your semesters. You know, there are a lot of opportunities to take seasonal internships at, you know, the Big Four and some of the Big Three and a lot of the regionals and mid-sized firms. And that means you're going to take a semester off and really work for them, you know, and be like a sample associate and get an understanding of what the work is. And I think predominantly the students that I know that did this, you know, were those who didn't have a full-time offer after graduation, and these generally translate into full-time, or those who are in co-op programs where they have to take a semester off and work anyway. But like, let's say you want to go into audit and you have an audit internship over the summer. There's not a whole lot of audit work going on during the summer. So you're not going to be getting the real experience. Tax, perhaps more so. You will be working long hours and ordering dinners with full-time people in tax. But, you know, I want to make it clear in audit, you won't be doing that. So I really encourage, you know, people to take advantage of those opportunities when they see them available or they have the ability to. I'm going to pivot back to some questions. Radhika, I completed my bachelor's degree, but didn't major in accounting finance. Can I transition from marketing to accounting and finance? Yes, you can. As I said before, a lot of people who have, you know, marketing or liberal arts undergrad degrees, your master's in accounting will make you CPA eligible because those 30 credits are key. So let's say you were an accounting major undergrad. Let's flip that question. Let's say you were an accounting major undergrad and you want to do your master's in accounting or master's in tax as well. Your master's in tax will be focused on upper level tax specific courses, and your master's in accounting will just be higher level accounting courses. But within that 30 and the master's in accounting, as long as you've taken, clearly because you're a marketing major, you've taken your introductory business courses, your accounting 1 and 2, your intro to marketing, your intro to business management, all those courses, because you've taken those already, you know, your master's in accounting will enable you to get an accounting job upon graduation and enable you to be CPA eligible. Can you pivot into finance? Perhaps a little bit more of a difficult road. There are masters in finance program. I'm going to let Jake jump in a second to let you know his opinion on those. But for the most part, those masters in finance programs aren't always direct feeders into finance roles. Some of them are structured to prepare you for the CFA. Some are more structured to give you high-level financial knowledge, but they aren't necessarily recruited as hardly as significantly as, let's say, an MBA, which you should only get when you have more work experience. But yes, you can is the answer to make that jump. There are just probably a lot of steps that you need to take in between.
Yeah, and adding on to getting a master's of finance per se, from my experience, actually in my starting analyst class, there were a few students who had masters in finance, which was an additional year, but they did not skip the analyst years. I don't believe they got paid anymore. Typically, those are the students who figured out about, again, this, I'll just speak for investment banking, who figured out about investment banking too late and wanted to be eligible for the internship, because those internships recruit sophomore year. So if you figure out you want to do it junior year, you really need to set yourself a year back, quote unquote. So these students would do a 5th year in undergrad in order to be eligible to get that internship their junior summer or their senior summer. So it would, for the masters, it was really kind of not a last ditch effort, but it's an extended time period in which you might be eligible to get one of these roles straight from undergrad versus getting an MBA.
Yeah, it gives you another out. It's obviously not a cheap out, but it's worth it if that's what you want to do. Jumping back to Erica, how do I use my early time in uni if I don't get accepted to any internships? So, I think like the way I look at it is the way, in terms of how things were explained to me, with regards to investment banking. Somebody once said, Joey, investment banking is about getting in the room. Once you get in the room, you can move to any IB role that you want as long as you put in the work and you have the knowledge and acumen, you'll get there. As opposed to, I interned at a tiny bank, I traded up to Rothschild. And when it comes to accounting, the same goes for moving up within the firms. And if you don't get an internship, get the next best thing. If you're not in the room, get in the hallway or the foyer. Work for a business or try to help out at a nonprofit. Do something that shows quality of character. Do the next best thing, whatever you think that is. Obviously, the more related it is, the more it'll translate on your resume, and it'll be more of a concrete story. But I think like people, if they whiff on the leadership conferences or the Big Four internships, they're like, I can't do this. I'm not going to get it, and that's just not true. There's tiers of opportunities, and you can continue to trade up however you see the hierarchy. And let me know if I can clarify that any further, Erica.
Yeah, I think if that's it on the questions, then we can end it here. I know we are over time, but thank you everybody for joining this evening. We hope you learned something. Joey did a fantastic job of walking through this, but also kind of giving his experience. Joey, any parting words, piece of advice for these students?
Sure. I think what I was trying to say before all the questions came in was really position yourself to get the real experience of what the role will entail. You won't always get that through a summer internship. Talk to your professors, connect with someone at StepStone, meet people from industry to get a real understanding of what the role entails. And if you really want to do that, and then start taking the necessary steps that we discussed tonight on how to position yourself for that kind of success.
Amazing. Thank you, everyone.
Thank you, Joey.
Have a good night, everyone.